Hello traders, Gary Wagner here, just about 10 o'clock, just before 10 o'clock, I should say, in Honolulu, just before 4 o'clock in New York. It is Tuesday, March 15th, 2016, and we're looking at a Dow Jones Industrial Average just prior to the close as the FOMC meeting kicks off, which is scheduled to conclude tomorrow, trading in essence unchanged on the day. 17,231, that's current print. The low 17,120, the high 17,248. So as you can see, very, very dynamically quiet and compressed range on the day, as of course traders await news. Now, we do have a current trade on. That is, we are long our Standard & Poor's vis-a-vis the E-mini. That is trading off about 5 points on the day at 2,004. We've seen it trade to a low of 1,995. Of course, we have stops below 88, so we weren't threatened in terms of having any kind of stops hitting. And in terms of the high, that's been 2010 on the day. So traders, the first thing that we definitely want to look at, and the market's trading roughly at about 2005 right now. This, of course, is our daily chart. On this daily chart, we have two critical moving averages, our 50-day moving average and, of course, our 200-day. 200-day really where we need to place some attention. Now, we absolutely broke above that just the other day, and we talked about how significant it was. Just as significant, however, is the fact that over this last couple of trading days, we have not seen this market by any stretch of the imagination threaten and move into the territory and overcome this obstacle of this 200-day moving average. Now, that being said, we realize that we're on the cusp of a FOMC meeting, and because of that, simply put, we're going to get quiet action as we go into tomorrow's conference, in which we'll get some sort of notification as to which way the Fed is going to move in regards to interest rates. So traders, we're actually at close right now. It is just after 11 o'clock, and we're really looking at settlement, and of course Globex is going to take over. But as you can see, whether it's short covering or just squaring of positions, we certainly see a little bit of activity to the upside in terms of where the S&P might want to move. You can see this high right up in here, and I'd like to see, of course, a couple of ticks to just get over these tops at 2005. Now, traders, another thing that is definitely noteworthy is you can see that the range has really gotten sucked out of the last couple of trading days. If we take a clip at, say, the last 1, 2, 3, 4 trading days, there was this one very, very solid upside day, Dow up about 300 points here. But other than that, you've got doji, and very small bodied candle. And what that tells me, of course, is that there is this consolidation in the market, and that the traders are definitely awaiting what kind of news comes out of tomorrow's conclusion to the FOMC. And traders, so the other thing that we can see, I'm looking at a daily chart. This has our fib retracement points, but it's also in Japanese average format, Henkin Ashi. And so that when we look at it in that way, you can absolutely see that the gusto has kind of been pulled out of this most recent rally. Look how strong this body is. This is still a pretty strong body, although it's compressed in size from the one just prior to it. But now we've got this doji, and this doji is coming in roughly at this pivot point or critical. Right now, it has to be looked at still as a resistance area because we haven't really flown hard and past that. Market right now is trading 2005, 2006. As I said, we're looking at the market at approximately 5 after 10 here, 5 after 4 o'clock in New York. Let's see what happens tomorrow. For today, obviously, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.